A very good evening, everybody. Welcome to the live webinar on the aftermath impact on financial markets. I'm Ning Hui from Phillip Nova, and tonight's webinar is held in collaboration with CME. Speaking to us tonight will be Mr. Daniel Ang, CEO and founder of Traders Academy International. Before I pass the time to Daniel, please be reminded that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will address them during the live Q&A session towards the end. And now, without further ado, over to you, Daniel.
Thank you very much, and a good evening to all of you. I hope all of you can see and hear me, and of course can see my slide. Right. Okay. Now, exactly a week ago, we knew what happened. We have the US presidential election on November the 5th, and the result did not come as a major surprise, but market did move very aggressively. And today we're going to address this topic as to what happens post the Trump's victory on November the 5th. And that is more than meet the eyes, and I'll be covering the various key agenda that Trump is definitely very passionate about, and how those agenda is going to impact different markets. But of course, we are given the time constraint. We are only going to talk about equity markets. So just hold your horses, and let's get going. Before we get into the content itself, I'd like to remind you guys that this presentation is by no means an offer to buy or sell any kind of security, be it futures or option. And the trading of any kind of margin product, especially futures, do carry risk. So be aware of your own risk tolerance before you attempt to trade any kind of margin product. And I'll be sharing you my views on the various markets. And do remember, those are my views. Has got nothing to do with the host and the sponsor. And of course, the content of this presentation has not been vetted by the Monetary Authority of Singapore. Okay, so this will be the caveat. Now, we all knew what is the result. The result came in the hours following the November 5th election. Trump did not only win, he actually win by a landslide by American standard. And we can see here the tally is 226 votes. The Electoral College for Kamala Harris, his opponent, and Trump managed to garner 312 Electoral College, and he definitely wins this race hands down. Okay, it was not something that we were told that it's going to be a tight race. This race is anything but tight. Okay, and the Republican Party, in which Trump is a candidate, did not just win the presidency, they also managed to win the Senate handsomely. Now, this is so far the result. The Senate results are already in and they are confirmed. And the Republican snatched control over the Senate. Currently was controlled by the Senate, by the Democrats, by a tally of 46 for the Democrats and 53 to the Republicans. So this is definitely something to cheer about. And right now, the final result for the lower chamber of the Congress, which is the House of Representatives, is still up in the air. But we can see that the Republican only need 4 more votes to gain control of the House of Representatives. Now, we all know that the Congress is made up of 2 chambers. We have the Senate and the House of Representatives. If the Republican also manage to snatch control of the House of Representatives, it will mean a trifecta, meaning to say the Republican Party will have the White House as well as both chambers of Congress, and it makes the passage of the president's favorite agenda a lot easier, because that means to say that because they enjoy full majority in both chambers of Congress itself, it will be easier to pass resolutions, and that will be something very different from the current arrangement in which the Congress is split right in the middle, with the Democrats controlling the Senate and the Republican controlling the House of Representatives. So you can see the policy that wanted to be need to be passed has been in gridlock. So the fact that the one party controls both chambers of Congress and the White House means it will be an easier job for the incoming president, which will be Donald Trump. Okay, but we all have to remember, from now until Donald Trump gets into the White House on January the 20th, there is something like 68 days to that. Okay, so 68 days is a long time in politics, and anything can still happen. Okay, And of course, this is the race right now. The question here is what happened after this? Okay, we all knew market has reacted. We saw equity markets surge to all-time highs, and not only in the Dow, the S&P 500, the Nasdaq. Okay, we also see the Russell 2000 also having a massive run up. Okay, we also see the dollar also started to recover, and we also see gold prices started to reverse. And of course, that is understood to be the case because Donald Trump is anti-war, and he has previously mentioned that he will be able to end the war in Ukraine within 24 hours of taking office. So that being the case, the catalyst for owning gold suddenly disappeared, and of course, gold has retreated, and it has retreated quite significantly. And of course, we also see Bitcoin having rallied, and as we are speaking this afternoon, Bitcoin is already above 80,000 handle. So this is something that we have never seen before. So all markets are moving, but we are going to be focused only on equity markets, and we will be covering the factors in fact where markets may actually move. Okay. First, there are still some hot topics. Of course, the victory is already known, and we are waiting only for the last bit of results to see if the Republican Party can actually snatch control of the House of Representatives. Now, we also knew that the Federal Reserve has actually cut rate, okay, 2 days after the election result was known, and this is the second cut in a row. In September 18, we knew that the Federal Reserve cut by a massive 50 basis point, and that was the start of a pivot in which the Federal Reserve has kept interest rate elevated for 30 years in a stretch. Okay, and this past week we saw the Federal Reserve during the FOMC meeting cut another 25 basis point, and the question here will be what will happen in December, because we have one more FOMC to go before the year end. And of course, people are looking forward into 2025, where the Federal Reserve maintained the interest rate cut policy. So all this will be up in the air. And of course, when we talk about politics, we also cannot forget that the last few years has been quite a messy in terms of the geopolitics, whether it's in Europe or whether it's in the Middle East. And these two will be holding the headlines going into 2025. Okay. Now, before we go into understanding how the various market may move, okay, we want to take a look at Trump's policy and their implication. Now, Trump, during his campaign leading to the November 5th election, has been very vocal about immigration, and he has, during his first term, he has attempted to build a wall between Mexico and United States. And of course, Biden did not follow through. During the Biden administration, they allow a lot of undocumented immigrants to actually pour through the southern borders, and Trump is wanting to do something about it. Not only does he want to stop the illegal immigrants from pouring into the southern borders, he actually wanted to initiate a mass deportation, something that the US has never done before. So there is going to be a lot of implication. And also, we want to see how Trump is going to ramp up oil production. Now, Trump suffers no fools. He has never been very much on the go green agenda. Okay, so he believes that the current economy still need fossil fuel, and he's definitely going to ramp up the production of fossil fuel, and that will have implications for markets as well. And we also want to see how Trump is going to follow through with tax reduction. During his first term, he actually started to cut corporate tax, and he intends to do it better this time. He not only wants to cut the corporate tax, he also wants to eliminate a lot of taxes, in particularly the service sectors. Okay, he one of his main agenda here, which has been copied by his opponent, which is to waive the taxes on tips, and this will also impact the markets. And we also know Trump has been very very engrossed, okay, in the use of tariff. And during his second term, he has already mentioned that he's going to double down on imposing tariff across the board, not necessarily against countries that he deemed to be adversarial. Okay, so I think this will be a universal tax, and you will have very inflationary implications going forward, and we will be talking about them as well. Okay. Now, talking about his immigration policy. Now, Trump has wanted to not only rebuild the wall, okay, he wants to continue building the wall. And one of the first thing he did is to issue a warning to Mexico because that is their immediate border. And he intends to actually be very aggressive about it. He mentioned that if Mexico does not stop the flow of illegal immigrants into the United States, he definitely want to slap very punitive tariff on anything that Mexico export into the United States. Okay, now don't forget that Mexico has actually have a trade, what you call it, agreement with the United States, and with this statement, it seems that Trump is definitely going to throw the gauntlet down to Mexico and asking them to enforce, okay, to stop the unrestricted flow of immigrants through Mexico into the United States. Okay, and he says that he's going to impose something like 50% tariff, and if it doesn't work, he will increase it to 75. If it still doesn't work, he's going to increase it to 100%. So he has been very vocal about this, and of course, we also knew over the last few years the trade war between US and China has resulted in Chinese companies finding the roundabout way to circumvent the tariff by shifting production lines to emerging markets. And because Mexico has a free trade agreement with US, a lot of Chinese companies, and in particularly those in the EV space, has actually set up production line in Mexico and hoping to export those into the United States under the Make in Mexico brand. Okay, and Donald Trump will have none of that, and he definitely will want to stop any kind of EVs manufactured in Mexico with any linkage to Chinese EV manufacturers. So we can see that I think Mexico is going to get a full blown of it, and it will not be just the Mexican, okay, because Trump's tariff is also universal in the sense that the other neighbor that the United States have is of course Canada, and Canada is already very edgy as to how this tariff is going to impact job creation in both sides of the border. Okay, and definitely Canada economy is not in the best of shape, and any kind of additional tariff is definitely going to have detrimental impact on their economy. Okay, so let's take a look at the jobs. Okay, if Trump goes through with his deportation of illegal immigrants, nobody knows for sure how many illegal immigrants there are currently in the states because over the last few years the border has been left wide open, and nobody really know where the immigrants are right now. So the job of deportation is something is going to be very massive. On any given year, US, even if they round up undocumented immigrants, they don't do it in excess of 1 million immigrants, okay? And that comes with cost. You know, the cost is the agency in charge of rounding up these illegal immigrants definitely would have to increase in terms of manpower, and it also have to also divert resources to documenting all these illegal immigrants, and some of them may actually take the litigation route. Okay, meaning to say that they will fight the U.S. government, and it will also have to increase the number of immigration judges, for example, and if they're going to build holding centers to hold these arrested illegal immigrants, that will be another cost. And of course, the biggest cost is who will pay for the deportation. Okay, and this will all come into being, and it will not be an easy job. While Trump make it sounds very easy, he's going to round all these illegal immigrants and then deport them, but it will take a long time for that to actually happen. Now, the illegal immigrants currently are what we call cheap labor. Okay, here we understand in Southeast Asia, if you have illegal immigrants, that means they'll be working in low-paying jobs, and the U.S. manufacturer and company has actually enjoyed the dividend of having paid below the market rate for illegal immigrants. And if all these migrants are being rounded up and deported, suddenly the companies operating in the states will find that their wage cost is going to go up, and and it will fall unevenly on different sectors. For example, in the construction sector as well as agricultural. So these sectors here will definitely be impacted negatively, and of course there will be knee-jerk reaction if companies cannot find affordable labor. Okay, because there are certain jobs. Of course, the Americans are not interested in doing. So all this will fall into the illegal immigrants, and once they are deported, you can find that a lot of sectors will be impacted. Okay, here we have a chart here that says the labor shock to the various industries that are heavily reliant on illegal immigrants will definitely be in focus right now, and we want to watch out which company and what sector will this impact should Trump actually go through with his deportation threat. Okay, here we see that not only that illegal immigrants actually do contribute to the U.S. economy in terms of taxes. There is an estimate that so far illegal immigrants, although they are undocumented, contribute something like $46.8 billion into the federal coffer. Okay, and of course this will also impact at the state as well as the federal levels. We can see that these are big money, and of course we also know that these undocumented migrants will also be contributing to their social security net, and we can see that those are again not small potatoes, those are big numbers. And if you really enforce your deportation rules, all these numbers will be missing from the US Treasury. Okay, so it all means that it comes with very severe costs if Trump actually followed through with his threat to deport those undocumented immigrants. Okay, and in terms of the impact to the GDP, it can be as big as 4.2% to 6.8%, and nobody really know how bad it will be if that actually comes to being. Okay. Then the other policy that Trump have is to ramp up oil production. And we can see oil production here as of so far this year. We can see there was a period where oil production in the States was actually going down until 2009, where they discovered how to do fracking. Now, fracking is the use of water pressure to actually access certain natural gas and oil that are locked in between different layers of the sediment. Okay, so we can see that since the technology is available for fracking, you can see U.S. Oil production has actually surged to the point whereby right now U.S. is, if not the largest, is about the largest. Okay, in terms of exporting of oil. Now, there's something about crude oil in the States. Now, US has not built any refineries of any size for decades. Okay, so what they do find is that it's cheaper to import crude oil from Venezuela, which is blessed with a lot of natural resources, in particularly energy. Okay, but the Venezuelan oil are heavy crude. Okay, meaning to say they don't flow as easily, and they have very high sulfur content. So currently, U.S. refineries are able only to refine those Venezuelan oil, those heavy crude oil, okay, with very high sulfur content. Now, the new oil, so-called new oil that the U.S. has managed to use fracking to actually produce, those are of a different grade, totally different from the Venezuelan crude oil. Now, this new crude oil that the U.S. has managed to extract using fracking, what we call sweet crude oil, and they are light, meaning to say that they are easier flowing and they have very little sulfur content to the point whereby it is deemed to be sweet. So they are totally of different grade. So it does not make sense for U.S. refineries, refining oil producers to actually build new facilities to cater to this. So I think at the end of the day, they find it makes more commercial sense internally. While they are refining those oils from Venezuela, they will be using them for their own use. Whereas the so-called new oil through fracking will be exported to the rest of the world. Okay, because they do not want to build new refineries. After all, during the Biden administration, fossil fuel is deemed to be not carbon neutral. Okay, and they do not want to build new facilities, knowing that the current Biden administration wants to go green. So this means that there will be more US crude export in terms of oil, okay, and that has been reflected in the price of crude oil this past few years. Now, this is as of last night, okay, the price of crude oil, WTI, has actually been flirting with the year low. Okay, the low so far was $64 and something cents. I can't remember exactly what's $64.78. And as of this afternoon, the price is trading at 67 and 96 cents per barrel. Of course, this is referring to the West Texas Intermediate crude oil. So we can see oil prices are depressed. And if you believe that Trump is going to follow through with his uh, uh, increase in oil production. The slogan that Trump is using is called drill baby drill, okay, meaning to say go ahead and drill, okay, and that will mean that there will be more supply coming on stream. Now it used to be OPEC plus seems to be calling the shot, but because US now has a controlling what call that share of the oil production, it means that the US now has the final say. And if this is the case, we probably will see lower oil prices. But again, we have to understand during the Biden administration, Biden actually draw down the strategic petroleum reserve. Okay, to the point whereby I think one of the first things that Trump will do, because oil prices are so cheap now, I think he may be tempted to start replenishing the reserve. Okay, and if that case, that will put a floor underneath crude oil. So just be aware where if you are trading crude oil, okay, but it will have an impact on the overall inflationary situation that we are currently in. Now, Trump pride himself to be the tariff man. Okay, the tariff man means to say that he's going to win a huge button. Okay, and that button is of course tariff. Okay, he said he loved tariff. Okay, meaning to say that he think imposing tariff on everybody, okay, that export into the United States is going to go a long way to help him solve many of his problems. For one, he wants to do the reshoring. Reshoring under the Biden administration has been very patchy. It has not led to an increase in manufacturing. We can see that the manufacturing PMI, the Purchasing Managers Index, is still languishing below the expansion, below the we call it contraction zone. Okay, so for all intents and purposes, the reshoring effort has failed. Okay, and Trump feels that he is going to be able to solve this by imposing tariffs across the board, whether they are allies or whether they are foes, whether they are real or imagined. Okay, the reasoning here is that if companies wants to avoid paying tariff, the whole idea is to encourage them to set up production facilities within the United States to avoid paying tariff. So he believes tariff is going to be one of his major economic tools to get the things that he wants, and he also wants to use tariff to also offset the cut in taxation that he is going to roll out. Okay, so the other major platform is that he is going to he's going to implement lower taxes, especially corporate taxes. Okay, so this tariff, how it works is that he already said that he's going to be very focused whether irregardless of where they come from, the minimum he wants to impose is a 10% tariff across the board to as much as 20%. Okay, and companies that actually retaliate against this tariff, Trump is going to impose even higher tariff on those countries. Now, as far as EV is concerned, Mexico is a major production center for Chinese EVs right now, and although the sales into the United States account for a very, very, very small portion. Chinese EV manufacturers obviously have their eyes on the mainland USA, and if that is the case, then all these plans to actually manufacture in Mexico and then export to the United States will come to naught. Okay, but all this production will have to go somewhere else, and I think it will go further into the Latin American markets. Okay, because Chinese EVs are very welcome. Because they are not only good looking, they are very affordable, and in terms of technology, it is definitely a lot more efficient. So there is that inherent demand for Chinese EV. But as far as the US is concerned, Donald Trump is going to protect the legacy automakers like Ford. Okay, and this is something that he wants to make sure that no American jobs are being destroyed as a result of this onslaught of very efficient and very cheaply priced Chinese EVs. Okay, so he already said he will continue to impose tariff even if he has to slap 1,000% tariff on those made in Mexico EVs. Here, this is the tariff, and tariff are by nature. We all knew during the first term, Trump's first term, when he started the trend of imposing tariff, and we see that at the end of the day, it is the American consumer who actually pays for the extra tariff. Okay, so China is anybody else that export into the United States will still be able to price a product as per normal. The importer of the product into the United States effectively pays for the tariff. Okay, so here we have a situation in which if the US uses excessively this tariff, the likely impact is going to be negative because tariffs are expensive. It means the retail price is definitely going to be impacted by the markup in the final products itself in terms of the excess tariff that the American importer have to pay. So right now we can see US inflation is already coming down. Now the Fed favorite inflation gauge, which is the personal consumption expenditure. Tomorrow we have another update by CPI. But for now, the PCE, which is the personal consumption expenditure, is flirting with 2%. Okay, it's 2.1% last month. Okay, so it means for all intents and purposes, the Fed is almost hitting its 2% target. Okay, so if Trump actually go through with his threat to impose punitive tariff on all imports, we will most likely see a reversal in the inflation trend here. Okay, because tariffs are very inflationary. So the other thing is that we also knew that the Federal Reserve has actually pivoted, having kept interest rate elevated for 30 months from March of 2022 till September of this year. We can see that the highest rate that the US, or rather the Federal Reserve actually determine where the rate is. The highest was 5.5% and it has come off. Okay, effective Fed fund rate currently this morning when I checked was 4.83%. Okay, so we knew that last week the Federal Reserve cut another 25 basis point. So that will bring the Fed fund rate to somewhere between 4.75 to 5%. Okay, so this is where we are right now, and whether or not the Federal Reserve will be continuing this trend of cutting the interest rates remains to be seen. The consensus here is that the Federal Reserve may be wanting to be very careful about not igniting inflation all over again. Because if you cut interest rate too fast too soon, it will cause consumer to go out and spend, and that will not be very ideal as far as fighting inflation is concerned. But I think we don't have to worry about it for now, because I think we have about 68 days to Trump's inauguration. So in the meantime, whether the Fed is going to cut one more round in December, I think the odds is still very much in play. Okay, but anything beyond that, I think will be too much of a call for now. Okay, nobody really knows whether the Federal Reserve will have the stomach to actually cut further the interest rate. Now we all knew the current chairman of the Federal Reserve, Jerome Powell, was actually installed by Donald Trump during his first term. And during the press conference after the FOMC meeting on the 7th of this month, which is last week, the Fed chairman not only gave us the reason why he decided to cut further the interest rates, he also mentioned something quite interesting. He says that the president's even if the president asks him to resign, he will not resign. Meaning to say he is also very fearful that although the Fed wants us to believe that the Fed is independent, it is very difficult to work with the executive arms if the president wants you to go. Okay, there is a likelihood that Donald Trump may actually not reinstate the Fed chairman when his term is up during 2026. So we still have some time to go, but apparently the Fed chairman is concerned enough to actually talk about it last week. Okay, so let's watch how this thing plays out. And during his statement, he did mention that reducing rates too early is also not good. Cutting too late is also not good. So here right now he says that he will watch the data as it comes, and if the CPI and the PCE rates continue to slide down, that means to say he will have more room to actually cut further. However, if we see a spike, okay, then obviously the option may not be available to him. We knew at the beginning of the month the non-farm payroll came in at 12,000, which is one of the lowest we have ever seen. And just remember, just 2 months ago, or rather 3 months ago, the non-farm payroll was actually very, very good. Going into the election itself, we can see that the non-farm payroll has all been revised higher until the most latest one, which is the first Friday of this month, whereby the number of jobs created was way, way below, and they attribute that number to the fact that there have been back-to-back hurricane in the southern states, as well as the strike by workers of Boeing, and those strike has been resolved, but at a huge cost to the company. And we will see that the higher wages that has been championed by their union will show up in workers' wages in the months ahead. Okay, and we will have to see how this thing is going to impact, because workers are getting very militant and they definitely have the upper hand right now. Here is the unemployment rate. We saw unemployment rate has been going up, although over the last 2 months we can see it has dipped somewhat. The highest was 4.3%, and this is crucial because historically any unemployment rates above 4.4%, if it's sustained, will almost always lead to a recession. So the fact that the last 2 months has seen an easier unemployment rate doesn't mean that the risk of more job loss is over just yet. Okay, it can actually spike again. Okay, so we want to watch the unemployment rate. Like I say, anything above 4.4% over extended period of time has historically led to a recession. So we want to watch that as it unfolds. Now, with last item we want to be talking about will be tax. Okay, Trump tax proposal is actually a breath of fresh air. Okay, while the world is looking to high interest rate like in the UK, Trump believes that taxes, if you keep it elevated, is going to take away the incentive to produce. After all, Trump is a businessman. He understands that lower taxes will actually incentivize companies to actually gear up production. Okay, and by gearing up production, it will create employment. So Trump wants to cut taxes very aggressively, and he wants to extend the existing tax cut because it's going to expire in January, right? So he hoped to be able to revive that those tax cut and actually cut the corporates further to 15%. Okay, so if that's the case, more foreign companies may be encouraged to set up shop in the United States, considering that Trump is going to increase tariff on all imports. So it makes it very conducive right now. On the one hand, he offers a carrot in terms of lower corporate tax. On the other hand, he actually will a baton saying that if you don't set up shops in America, I'm going to slap you with at least 10% tariff. Okay, so he has been offering the carrot and stick approach here. So will that encourage more foreign firms to set up shops in the United States? We want to see that, because this is part of his agenda to reshore manufacturing. Okay, we will see whether he can actually do a better job compared to the current administration. Here we can see that tax cut also come with costs. Okay, so now the government itself depends on receipt by taxation. Okay, all governments go out and collect taxes to pay for the various spending program. Okay, so if Donald Trump says he's going to cut taxes, he must be able to find something to actually replace the lower tax collection. Again, I think a big part of his agenda is to do so through tariff. Okay, and if he can raise tariff, he can more or less offset the lower tax collection. So here we want to see whether that will actually increase the overall debt. We already know that US national debt is hovering just under $40 trillion. I checked this afternoon, it was at 35.9. Okay, just a touch under $36 trillion. So this tax cut is going to definitely impact the national debt of the United States. Whether it was Kamala Harris that win the election or Trump who wins the election, both candidates economic policy also will lead to an inevitable escalation in the US national debt. And for one, we all know when you have lower tax collection and higher spending, which is the case right now, we can see that the budget will have a gap. This gap is called a budget deficit, in which you collect less than what you need to spend. Okay, so we can see that is a shortfall of almost $2 trillion. So this is something that we have to consider because this is totally unsustainable. Okay, and this time Donald Trump also roped in Elon Musk, who actually is going to champion how to trim down the government spending. A lot of government agencies are totally redundant. Nobody knows how many agencies there are at the federal levels. And of course, Elon Musk's task is to do an audit and to do away with unnecessary agencies and its spending. And hopefully, over time, that can bring down their budget deficit to a more sensible level. But in the near term, the trajectory for higher debt is something that we all have to be very concerned with because, like I said earlier on, not only is the US heavily in debt, a lot of the G7 economies are heavily in debt, including China. So everybody has the same problem, but nobody has the issue like America, okay? Because US borrow in dollars, whereas the rest of the world may not necessarily able to borrow in their own currency. So if a higher dollar is going to be the case, then obviously the servicing of this national debt by the other nations, okay, is going to be a major catalyst going forward. Okay, so tax cut without spending won't reduce the tax burden. Of course, this is logical. If you continue to spend at the current rate, even though you have tax cut, it's only going to widen the budget deficit. So we all understand that if you only look at a problem in which countries like UK only look at having to impose higher tax collection without necessarily looking to cut spending, it will not do the job. Okay, you will have to have a simultaneously cutting of spending, and of course also the curtailing and the curtail spending as well as to make the tax collection more efficient. And this is also one of the reasons why there has been this trend towards issuing a CBDC, because at the end of the day, CBDC is all about control, about able to get hold of all the all the tax that has managed to be not be captured in the current cycle. Okay. Here is the budget deficit. Oh, I've shown you this earlier. Sorry. Okay, this is the national debt. The national debt currently is just under $36 trillion. This is as of this afternoon when I checked, and with Trump's spending program, okay, with his favorite program, it is very likely that by the year 2035, 10 years from now, the U.S. national debt will balloon to $43.5 trillion over time. And obviously, we all knew this trajectory is totally unsustainable. At some point, they will have to deal with this biggest elephant in the room. Okay, here his proposal include abolishing taxes on tips. He also want to extend the tax cut that he passed during his first term, and he want to eliminate taxes on social security contributions. And of course, he also want to lower the corporate tax from currently 21% to 15%, very much in line with Hong Kong. Okay, and to also impose levies of between 10 to 20% on all imports. And as for China, definitely he is definitely going to put the pressure on China by imposing higher than normal tariff. And of course, China will not take this lying down. China will retaliate in kind. Okay, and if that's the case, we want to see how they're going to respond. Okay, so tax, as far as tax is concerned, all this is going to come into being, and we want to see how he will play this. Now, to offset this increase in spending and reduce tax collection, I think he will be looking to do a few things. Okay, first, we already know his 5 tax policy, which is to exempt taxes on tips, to also remove tax on social security, overtime pay, as well as auto loans. He want to create an itemized reduction on auto loan, which is one of the major inflationary concerns so far, and also to reduce the corporate tax rates. And all these will add something like $2.5 trillion over a 10 years period. So we can see that he has to find other means to plug this hole. And I think he will be looking to impose new tariff. And like I say, one of his agenda is to find to impose higher tariff to pay for the reduction in taxation. So this is something that we all want to see how it will play out. So the first casualty, miraculously, if you have not already noticed this news, the first casualty of Trump's victory on November the 5th has been Germany. The three-party coalition in Germany actually collapsed within hours of Trump declaring victory, because they know during Trump's first term, Trump is all about America. Okay, the rest of the world can take care of themselves. So Trump doesn't want to spend on maintaining military bases, and U.S. has a lot of military bases, and he wants this country that house American troops to pay, okay, for the privilege of having American troops on their soil to protect them. So I think this is going to be something that the Europeans are very, very concerned. Not only are the Europeans very concerned with the return of Donald Trump, countries like Japan and South Korea and maybe even Taiwan and the Philippines will be ransomed to pay much, much higher maintenance just for the privilege of having the United States protect, offering them a security umbrella. So all this is causing Germany to wanting, the current chancellor wants to ramp up the budget. Okay, so his finance minister actually come from a coalition party, and they all do not agree. Whereas the finance minister wants to tighten belt, the chancellor of of Germany wants to actually increase the budget to get ready for the arrival of Donald Trump. Okay, and because they can't agree, so he sacked his finance minister, and that caused a collapse in the coalition government that he's currently ruling over. And it is very possible there will be a confidence vote. The current chancellor is likely to lose that vote, and if that's the case, there will be a general election come March of 2025. Okay, so maybe 2 months after Trump gets back into the White House, Germany will have to decide which direction they want to go. Okay, most likely, I think the entire Europe, including NATO, for example, will be very concerned, because at one point during his first term, Donald Trump actually wants to do away with NATO. Okay, and there is a current war that's ongoing in Ukraine, and of course, Ukraine is very concerned whether he is going. The 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 president is very concerned whether he's able to continue to receive the aids coming up from the United States. Okay, Trump has already made it very clear that he wants that war to end. Okay, and if that means having to ask Ukraine to trade land, okay, for peace, then that may be something that we want to be watching. Okay, so far the response from Russia has been lukewarm. Okay, the Russian president has only belatedly only offered his congratulations to Donald Trump, and this is obviously something as a posture. I don't think the Russians believe that it can be done easily within 24 hours of Donald Trump returning back to the White House. So we will have to watch again, but if we can, that will take away the incentive for owning precious metal like gold. Okay, gold has actually reacted, thinking that Trump is able to actually deliver that peace in Europe. Now, even if we can deliver the peace in Europe, we also have a concern about the other war that's ongoing in the Middle East. Okay, so the war in Europe is going to be very much in focus during the first few weeks, first few days of Donald Trump's return back to the White House. However, the other one that is more sticky, in my opinion, is the Middle East. Okay, the Middle East, we all know Israel is at war with not only the Hamas, okay, on the West Bank. They are also at war with the Houthis in Yemen. They are also at war with the Hezbollah in Lebanon, and lately they are also in open conflict with Iran. Okay, and Iran is definitely sponsoring a lot of all these proxy fights against Israel, and there is that risk that Israel may actually widen the war. And Donald Trump is very tight with the current Prime Minister of Israel. During his first term, he actually agreed to let Israel shift the capital to Jerusalem, which draw a lot of fire. But Trump is very firmly behind Israel, so we will have to see his posture, whether his posture is helping or not helping the peace effort in the Middle East. If that being the case, if the war in the Middle East continues to flare, it could lead to impact on crude oil, because Middle East, after all, is a major center of oil production. Okay, so watch out for that as well. Now, the other one, of course, is China. The relationship between U.S. China has been adversarial during Donald Trump's first term, and I think China is getting ready for him. Okay, and over the years, I think China has found ways to circumvent the various restriction on technology, and also to find work around among to actually overcome the tariff imposed on Chinese, and we can see that that will be something that will get even more aggressive in the days to come, in the years to come actually. So whether or not that will result in an open, more confrontational approach between the two big giants remains to be seen as well. Okay, all this will have impact. Okay, just the fact that Trump is going to impose tariff, irregardless of who they are and where they are produced, will impact emerging markets, because China has actually been shifting production line overseas, okay, to emerging nations. And if now Donald Trump says he doesn't care where the import comes in, and the emerging countries that has actually benefited from what you call that, decoupling from China, will actually be taking a full blunt of the force, okay, of this new tariff move by the United States. So now we talk about the markets itself. I know I'm getting a little bit late here. Let's continue to do this. The Dow Jones has obviously been trading at all-time high. Yesterday was Veterans Day, so there was no trading in the United States yesterday, but in the OTC, in the correct after exchange trading hours, we can see that the futures are still actively being traded. The Dow Jones broke above 44,000 for the very first time in its history, and the trajectory in the daily, in the weekly time frame, does suggest that we are definitely in a bull market, which has so far not given any signs that it is about to end. Okay, so year to date for this year is up 17.5%, and we understood that the U.S. equity markets restarted again in October of 2022. Okay, so we can see that led by AI, most of the technology stock has actually rallied quite tremendously. So the high traded in the Nasdaq was actually traded on July the 10th, whereas the Dow and the S&P 500 has been taking the lead, and that has been largely due to the war in the Middle East. That is sign that there are capital fleeing the other major money center into the United States, because there's an escalation in the war, especially between Iran and Israel. A lot of capital is fleeing traditional money centers, definitely, and they find their way into the United States. Once the capital reaches the United States, it will not be lying idly in the US banks. They will be deployed, and most of the money that we see in this capital flight has found their way into US equity markets. That has been leading the world higher in terms of the stock markets. So in the futures contract, okay, later on I'll be sharing with you what are the futures contract you can actually use. The one of the most successful futures contract ever developed is actually the equity index futures. I remember trading the Dow S&P 500 back in the 1990s. In those days, there were no E-mini, there was definitely no micro E-mini, and in those days, of course, the S&P 500 is not at this kind of levels. Okay, so right now, because the notional value of the index is so high, it is impossible to trade the futures contract at the retail level, because the margin required will be so prohibitive that we are not able to trade the regular size equity index. So the exchange, the CME actually roll out progressively contracts that are very friendly for the retail investor like you and me. And just before the pandemic, months before the pandemic, they came out with this contract called a micro E-mini. Micro E-mini are a series a suite of equity index futures that are definitely geared towards the retail investor like you and me. Okay, so we can see that this is the daily time frame, and the futures contract traded as of last night. Actually it should be as of Friday closing is above 6,000 for the first time. Okay, so we can see that the market has been very, very strong. It looks like there is no reason to suspect that it cannot go higher. However, there are already signs. This is based on the daily time frame. We can see that price action has continued to go higher, whereas the MACD, which is a momentum indicator, is showing that the high that we see where the index is at record high is not necessarily following through from the previous peak. Okay, so there's a bit of a technical divergence. And for those who are very familiar with Elliott wave, you can know that Elliott divergence between price action and the indicator, whether you are using a RSI, a stochastics, or MACD, you can see that once you see a divergence, it is a sign that the market may be topping out. Okay, so do not go in and sell just yet, because there's simply no sign that the market has already peaked. It's just telling us the market is diverging. At some point it will not be sustainable before it starts to come back down. Okay, however, I do not have the stomach to continue buying at this current elevated levels. I will just watch. Now the nearby area of support on the daily time frame is this highlighted area here, anywhere between 5,077 to 5,830. So this area here, if there's going to be a correction, I suspect one is coming. Okay, because the move here has been very aggressive. You can see it's almost vertical, right? So that means to say in the lower time frame, this could be part of a third wave, and after the third, there will be a fourth. A fourth is a corrective wave before the market goes into new high. So if there's going to be a pullback, this area here I just highlight for you could be one area to watch. Okay. Now, when we look into the weekly time frame for the this is the Nasdaq 100. The Nasdaq 100 is also only belatedly breaking new highs. Like I said earlier on, the high traded was actually over here. That was in January, no, sorry, July the 10th. Okay, and the market has actually fallen off quite a fair bit, and it did not manage to register new high until last week. Okay, then when the market actually responded to news that Donald Trump has won the election by taking up a new high. Okay, here you also see a bit of a divergence going on in the price action and the indicator here. So do watch out if there's going to be any kind of pullback. The nearest area of support is within this shaded area here. Okay, for those who want a copy of this presentation, can approach the Phillip Nova for a copy, so you can better see the result. So this is the micro E-mini Dow Jones futures. Now Dow Jones is by nature a money managers index, not much traded at the retail level. So most of the volume are concentrated on the S&P 500 and the Nasdaq 100. Of course, we're talking about a micro E-mini. Whereas the Dow Jones, because it is not so much a retail index, it's more an index monitored by the big fund managers. We can see that that has been also been very, very strong. The Dow Jones has been leading the market higher because, after all, it's a blue chip index. And earlier on, I did mention the flare in the violence in the Middle East has caused a lot of capital to flee into the United States, and most of them have found them been diverted into the blue chips, and which caused the Dow has been leading the U.S. equity market higher since. Okay, so here we do not see necessarily a divergence. It is very much in line. You can see this indicator here has a higher high than the previous peak. So this is very much in line. The target for now, okay, based on the daily time frame, is 43,000 about 400. So just watch these levels as we go higher. Okay. So this is the Russell. Now this is the surprise move. Okay, the Russell is a small cap index, but in terms of the reaction to Donald Trump's victory, it has been outsized. Okay, the move in the Russell has been almost vertical. On the day when most of the major equity index go up by on average 3%, this index moved up almost by double. Okay, almost in excess of 5%. So this reaction here is understandable because if there's going to be further cut in interest rates like what we saw last week, those will definitely disproportionately favor the small cap index. Okay, so we can see that the Russell has been very, very strong. Okay, so instead of only looking at the three major equity index, you may also want to pay some attention to the small cap. Okay, so this is the contract specs. For those who have not already traded the micro E-mini equity index, there are four major ones. Of course, the CME has recently launched two more, but the volume has yet to catch up. So we will allow those volume to catch up before we talk about that maybe next year. Okay, for the time being, the most popular in terms of volume is the Nasdaq 100. Here, the symbol is MMQ, and the index is constructed based on the $2 times the value of the index. Yeah, it moved by quarter point. Quarter point is equal to 50 cents, and the margin required is probably the highest among the four at $2,262 if you want to carry a position overnight. So make sure you have more than enough when you are trading the Nasdaq 100. The next most expensive index, so to say, is the micro E-mini S&P 500. The symbol is MES. The point value is $5 times the value of the index, and quarter point is equal to $1.25. So you can see it's a much bigger contract here. You can see, and the margin required is 1,483. Now, all these margin requirements are maintenance margin, and you want to check with your brokers from time to time because these are not cast in stone. Okay, the margin required will shift according to the volatility, and they can change quite drastically overnight. Okay, just always make sure that you have more than enough in your trading account when you're trading any kind of futures products. Now, among these micro E-mini Dow and the micro E-mini Russell, but right now has a slightly more higher volume compared to the Dow. Okay, because Dow is a big money index, whereas this is a small cap index, very much a retail index as well. The symbol is M2K, and the index contract size is $5 times the index, moved by 0.1 and is equal to 50 cents. The margin is by far the cheapest, less than $800 for overnight trade, and you can see that the Dow Jones is also quite favorable in terms of the volume traded. Now let me show you in terms of the volume and open interest. Okay, now this is on a daily basis. Okay, this is up to last Friday, and you can see the biggest spike here was on Friday or on Wednesday, the day after Donald Trump's victory is known. You can see that the volume spiked, okay, to a 2 months high. Okay, and here we also see the open interest in the S&P micro E-mini S&P 500 also continuing to climb. So what does it mean? It means that people are holding positions. Open interest means one buy, one sell left open, not settled or closed, will be shown up as one open interest. And we can see open interest has been climbing, and that shows that people are holding position. Meaning to say that this bull market have legs. Okay, if you look at it this way. However, over the last 2 days towards the end of last week, we can see the volume actually came down quite significantly. Okay, so if we have record highs but on lower volume, we know that is technically quite a quite a negative. Okay, so if you are chasing the market ever higher by buying, you want to note that the last 2 days of last week end up with lower traded volume, and this is across the board for all the other equity index. Here we have the Nasdaq 100. We can see that the open interest here is huge. Okay, every day more than 1 million contract is being traded between the micro E-mini S&P 500 and the Nasdaq 100. In terms of the two, the Nasdaq 100 enjoys higher traded volume, and here we can see that open interest has also been generally been climbing. Okay, here we also see that the last 2 days of trading for last week saw a drop in volume. Okay, while the index went into record high. Here we can see that the Dow Jones futures, the micro E-mini Dow Jones, we can see that the very big spike on Wednesday in the middle of last week was the result of the Trump victory news, and you can see that generally speaking the volume has also tapered on by almost half, and the open interest has also picked up somewhat towards the close of last week. So that shows that there are people still holding on to long position. Here the Russell 2000 is a little bit of a what kind of outliner here. Okay, we saw a major spike in volume on Wednesday, followed by decreasing volume towards the end of last week. And here we can see that open interest has been climbing. So all said and done, regardless of which index you are trading, it does appear that the retail investors are holding on to long positions. Okay, this is as much as I can see from the open interest and the volume. Okay, yeah, I want to show you this. Oh, I've been looking backwards. Sorry. Okay, here I will take questions, and then I think we have some time here. It's already 8 o'clock, and I will take questions if you have any.
Yep. Okay. Thank you, Daniel. We do have time for a couple of questions. So to everyone watching, we are now starting our Q&A session. Questions you may have about the US markets, and Daniel will be sure to share his insights and views. And to Daniel, while we wait for the questions to come through, is there anything from today's presentation that you would like to reiterate to our viewers tonight?
Okay, do watch out for the balance of November, December. I think going from now until the end of the year, I think it's almost a foregone conclusion. We probably will see equity markets continue to charge higher. However, I can't say the same for 2025. Okay, because 2025 is not that far away. Very soon we will be talking about what may happen in 2025. But I think for now, the momentum behind equity markets is actually pretty strong, and I suspect that it will be able to carry that through all the way to the close of this year. So over the next maybe a month and a half towards the Christmas season, it still pays to buy the dip. I think, my opinion. Okay, that has been a very successful strategy since the day I entered this business in 1985. Every dip, every major dip has been bought up, and that has been very, very profitable over the last 40 years or so. Okay, so near term, I suspect there will be some corrective moves to the downside, and those levels that I pointed out to you earlier on, those are the areas that may actually offers buying opportunity. Okay, however, if you are very, very aggressive and wanting to buy at the break of a new high, be very, very careful, because if you are too aggressive so late in the game, you are opening yourself to a lot of unforeseen risks. Just be careful.
All right, thank you for that. We have one question from our audience. He or she is asking if you can share again how Biden's reshoring efforts are patchy and what are the evidences.
Okay, when we look, every month we have different data set being released. Okay, one of the most interesting one to know whether the reshoring of manufacturing back into the United States is actually working. You look at the either you look at the S&P Global Manufacturing Purchasing Managers Index, or the ISM, which is another set of PMI, which is you look at the manufacturing sector from the perspective of the purchasing manager. Okay, and both set of numbers are showing us that the US manufacturing is still in contraction mode. Okay, and that being the case, it shows that the efforts to reshore has not worked. In fact, it has failed quite miserably. Okay, in order for us to see that the reshoring of manufacturing is working, uh, the manufacturing sector needs to get out of contraction zone. It has been in contraction zone for as far as I can remember. Ever since globalization is a catchword, a lot of manufacturing has actually left America because it's no longer economical to produce in the United States. Okay, so we can see over the last few decades, China has caught the trend of globalization, and China has done so well that they has built a formidable supply chain. It's very hard to pull out manufacturing out of China, and Apple will be able to tell you why that is the case. Okay, Apple do produce the final assembly of iPhones in Shenzhen. Okay, and the supply chain, okay, within Shenzhen, the ecosystem is so good that if you need any component, you can get it within hours. Move their manufacturing to other places, Vietnam and India. They still needs to depend on the supply chain in China. They have to import those parts into either Vietnam or India to finish the final assembly. So it just shows us that Apple being a prime example, it's very difficult to decouple from China because the ecosystem is so complete. Okay, to the point whereby China is, while it's no longer the cheapest place to do manufacturing, but it has a very complete ecosystem in terms of parts. You can get parts very easily, and there are so many suppliers offering them at very competitive prices. So for the United States to want to decouple from China, it will take a lot of effort. Okay, and it's not necessarily profitable. Can you imagine if USA want to reshore the production of the manufacturing of garments and footwear? Long ago, the United States are no longer able to produce Nike shoes at affordable prices. Okay, all those places that can produce Nike shoes are in the emerging markets. Okay, whether they are in Indonesia or whether they are in the Philippines, they are all in the emerging markets. Those are the industry that will never come back. Okay, so in terms of manufacturing, US can only hope to lure those high-tech manufacturing to the United States. For example, semiconductors, for example. Even that, we already saw the example by TSMC when they agreed to move some of their production line to Phoenix, Arizona. They find that they cannot find engineers of the same caliber who wants to work the very punishing hours that the Taiwanese are known for. So you can see that US are simply not competitive enough because the union is so strong, okay, and you cannot compete with the, let's say, Asian when it comes to manufacturing. So certain reality will eventually set in, pointing to us that manufacturing to a large extent is very difficult to come back to America. Okay, of course, Donald Trump using his tariff may actually encourage some to actually move production into the United States. The Chinese will not be able to enjoy that because if they find that the Chinese set up plants in the United States to produce products inside America, they will also be denied entry. Okay, so who else can produce as well as the Chinese? It's very few and far in between.
All right, thank you for that answer. And we have a follow-up question about it. What would you say are going to be the general implications of the new Trump administration on the Malaysian semiconductor sector? And do you think it could lead to US companies in Malaysia shifting some of their operations back into the US?
Okay, Malaysia is right now in that very much in the news. Okay, ever since the new administration comes into being, they have actually enacted a lot of very friendly or rather business friendly policies, and there is a very obvious pivot. I think Malaysia has already made a choice. Okay, they want to be closer to the BRICS. In fact, Malaysia actually applied to be a member of BRICS, and they have been accepted as, I think, not full member just yet, but we can see that there's a lot of goodwill between, let's say, China and Malaysia right now, and that would not necessarily put Malaysia in the good books of the US. We will see how the geopolitics play out. Not only are we talking about pure economics here, it's talking about who is with America and who is not with America. And the American always say this: if you're not with me, then that means you are against me. Okay, so Malaysia has enjoyed the move to decouple from China, and the semiconductor sector is one of the most obvious beneficiary of this move here. Okay, and Malaysia come from nowhere, and nobody actually pay a lot of attention to Malaysia, but suddenly Malaysia becomes a major player in the semiconductor field. Okay, and that has spilled over into other sectors as well. For example, data centers. We all know that AI means you need to have a lot of data centers. Okay, and data center comes with a lot of high costs. For example, land, you need a lot of land, you need a lot of water, and you need a lot of electricity. Okay, to power data center. And I think the fact that Malaysia has been in the forefront of trying to attract more data center to be set up in Malaysia will actually be very beneficial to the other sector, for example, the property, the real estate sector. Okay, because before you set up a data center, you need land, right? So when you need land, where do you go? You go and look for land to build your factories, and that will definitely be seen to be positive. Okay, it will also spill into the other sectors like maybe hospitality. So I think by and large, currently, as what we can see is Malaysia is definitely riding this current AI wave. Okay, and I think good for them.
All right. Thanks, Daniel. Due to the time constraint, we will end our Q&A here, but please feel free to drop any more questions and we will get back to you. And thank you very much for the insightful session, Daniel. Before we end the session, allow me to get my screen up again so I can share this exclusive promotion. Sorry. Sorry, I just had a technical difficulty over there. Yeah. You can turn the insights you've just gained from this session with Daniel into action and trade CME US stock index futures and options with Phillip Nova at a commission of only 98 cents. Eligible contracts include indices, gold, and crude oil. You can take a screenshot or scan the QR code to check out the full promo details. And with that, we have come to the end of the webinar. Thank you again, Daniel, for the sharing, and thank you everyone for your time tuning in to this webinar tonight. Like I said, feel free to send in your questions via the survey that will be popping up after this session, and we will get back to you as soon as we can. We'll also be sending everyone a link to today's webinar recording as well as the slides shared tonight so you can view them again if you would like to. That's all for today. Thank you, everyone, and have a good night.
Right.